it's a quick review of what 2022 looked like. So I want us to talk about the FX crisis, which we still have going on today. I want us to look at inflation in Nigeria with the famous inflation narrative for the US now, which feels strange for a number of people over there. And slowly we can talk about climate change and economic growth rates, which we recently saw. Then slowly move to how can individuals position themselves for 2022. If I have questions, I would drop them, I would raise them or flag it with you guys so any of you can respond to it. But Tolu, I want to start with you. Let's talk about the FX crisis a bit. Let's get into that part.
Yes, thank you very much, Fumi. Everybody who lives in this country know, our FX crisis and issues are well documented. So there's no need going through the motions and saying, it's from it. I don't even know what the exchange rate is now. I don't know if it is 570. I don't know if it is 413. I don't know if it is 420. It depends on which market you look at, right? There's so much market we're talking about it. That tells you effectively the scale of the problem, right? And if we take a look back at with every problem, you look at the cause and then you look at the solutions that's been proposed. Obviously, very simple. We demand FX more than we have supply. We demand foreign goods, we demand foreign services, we demand for energy, for instance, a critical one at that. We demand FX for energy. So for a significant chunk of our consumption, right, we demand foreign exchange for it. Unfortunately for us, we don't have a lot of supply for that. And so once there's challenge with our major source of supply, which is oil prices, when there's challenge out there with diaspora remittances, let's say there's with the COVID situation and the economic implication of that, people working, losing their jobs abroad and not being able to transfer money home, then the currency begins to feel the pressure. The Nigerian currency begins to feel the pressure. That's simply the cause of the problem. Now, to look at what has been done, given that it's a price stability thing, this falls directly on the desk of the CBN, and the CBN has approached it, in the last 12 months and even over the years, in two ways. But if we focus on from the beginning of 2021, it's either they try to kill the demand, right, or they try to support supply. Right. And when I say kill the demand, is anything that makes us ask for forex, CBN tries to discourage it. Easily they threaten that recently, I think in September, if you bought FX, bought personal travel allowance or business travel allowance, and you refuse to travel, CBN is literally threatening to arrest you. Right, that's a policy response. It's shared threat. Look at you and threaten you, giving back the FX, or I arrest you. In other ways, they've sort of disrupt. We know fintechs are the disruptors. They've disrupt the disruptors. by saying that Rice Vest, Bamboo, Trove, Chaka, all these platforms that help people to invest abroad, CBN has effectively called them, they enable illegal FX trade, right? And they've gone to court for this, and all of that, restricted, place no debit on their accounts, meaning that you can transfer money to them, but they can't transfer money elsewhere, right? And this went all the way to the court, right? In another instance, if their Bookie FX story is also in the papers there, they told the man, you are doing something outrightly illegal by publishing the prices, right? The other thing, they went to BDCs, they stopped supplying forex to them. In fact, the CBN said they are not issuing bureau de change licenses to anybody again, right? And so, they're just trying as much as possible to kill the demand on the assumption. I think underlying that assumption is the fact that some of these demands are not genuine. right? Which some of us may beg to differ with, right? But on the supply side as well, the CBN is trying to respond. They are trying to respond by the 5 naira per dollar that Debo mentioned, by incentivizing people diaspora remittances and saying that, look, come, bring your dollars into Nigeria and then take this 5 naira bonus, right? They did it for 2 months, I think from March to May or something like that. But I think they figured that this bonanza is not sustainable, and then they just put a hold on it. Right? But back to threats, the threatened exporters who are making dollars and saying that if you refuse to sell these dollars to us, then we'll also block you from the NAFX window. You will not be able to buy FX, then threatening as well the IMTOs, that's the International Money Transfer Operators, and saying that when people want to transfer money into Nigeria, don't transfer Naira on their behalf, right? Come and deliver the dollar to the person that is collecting the Naira in Nigeria, so that at least there's increased supply of dollars to. All of these things are, one way or the other, CBN trying to, paper over the cracks, if I may say that, right? The reality is that you have a demand and supply imbalance, and whenever that happens, prices adjust, right? And that is the situation that we're looking at. And we're saying that an economist, I will not speak of my own view, so I will tell you an aggregation of what economists have said. And these are World Bank economists, these are local economists, these are PhD holders in Nigeria. I think the consensus is that at some point, the CBN has to allow the Naira to depreciate. Convergence, right, between the official rates and all of the several windows and the parallel rates. And, I think IMF has said it, the World Bank has said it, economists, all over research analysts all over the country have said it. The approach of that convergence, narrowing that gap between official rates and parallel rates is what people are debating. People are very clear as to it has to be done. The question is, should it be done in one fell swoop, or should we have a crawling peg, where you will systematically allow the exchange rates to depreciate, so that even importers, exporters, manufacturers, everybody will have a clear picture of the path to depreciation of the market, right? And the interesting thing I should also mention is that if you look at the futures market, the FMDQ market, these are public data. So if you go to FMDQ, download the prices, you will see that there's an expectation that the Naira, from this official rate, there is going to be a depreciation, right, within the next 6 months. And there's even a 5-year futures contract, right, that suggests.
I was waiting to hear that part. Okay, till we get back. Yeah. Okay. David,
that Naira will be trading at 600, and I can't remember. I can pull up the data very quickly, but they are saying that.
Okay, Tolu, you're back.
Sorry, Jen. Yes, I'm back. I'm sorry. So
yes,
I'll just wrap up very quickly.
Yeah.
Yeah. So I was saying that all the economic metrics for forecasting exchange rates, right? Purchasing power parity, real exchange rate models, differentials between interest rates, differentials between inflation, all suggest that the Naira is currently overvalued and a depreciation is inevitable, right? And so you would expect that in the next 5 years, at some point, you will have a convergence of interest rates, of exchange rates in the parallel and on.
Okay. I'm going to take it that Tolu just did his recap and come to you, Philip, because we leave the exchange rate to be determined properly, it's going to worsen the current inflation situation. That's the truth. For a country that depends strongly on importation for most of the variables you need for production, or even for basic consumables, you want to buy a bowl, you want to buy, you see some of the materials we even use household, you just see it at the back, made in China. And you say, no, why can't this thing be made in Kaduna or somewhere? It's going to worsen the inflation situation. So Philip, I want you to talk to inflation slightly. If you could talk from how we started 2021 to where we are, that would be good, but just take us through it.
Okay, thanks a lot. Thanks, Olu, for the very extensive and insightful discussion on that. So, of course, inflation initially was on the rise, almost consistently for several months until March this year, when it started. After March, really, we started to see a decline. I think now we're at 15.99%. But at some point we're so close to 20%. Of course, food inflation is still slightly higher than that. I think that's still around 18% thereabouts. So what this means is, I think right now there has to be a sacrifice. It's true, you said, oh, okay, if you allow the Naira to float, it's probably going to increase the cost of importation and it's going to have its effects on the Naira itself. But look at it also, that you don't have what you need. Probably a manufacturing company does not have what it needs to produce enough. It's a function of demand and supply. It's like I produce very little and there's a lot of demand for it, then it technically or automatically drives up the price of what I have. And also what it means is that you don't have enough going into the system. Look at the time also. The fact that you need to buy FX now and you can't get it, or you probably, and the truth is that many of them have to go to the parallel market to get it anyway. Because if you look at even the list, the 44 items, I think are around 45 items now that are not allowed to import from the official market. But they are allowed to go somewhere else to source for funds. A lot of them, you know, are also basic food products. A lot of them has to do with day-to-day items. Unfortunately, Nigeria still doesn't produce enough of these things, which means that it still has to be imported. Now, I think if you want people to stop importing, at least attain some level of self-sufficiency, but we've not been able to attain that. Not that we've banned them from sourcing for funds, we only said do not go to the official market. So if you say don't go to the official market, but you can source it from elsewhere, it means that they will go to the parallel market and source the funds. So which means that even the market probably currently reflects the rates in the parallel market and not the official rates. So inflation might actually not worsen if it is allowed to float, because it means that there will be a convergence. And if there will be a convergence, it means that the parallel market rates would actually come down. And then the official market rate will also move up a little, and then there will be a convergence. Now, as long as there is an opportunity for arbitrage, there's been, maybe this year, there's been as high as 130 Naira difference between the parallel market and the official market. Then there's no way the dollar will not find its way from the official market to the parallel market. And there are several ways. Let me give you an example. Some of these companies abroad, is it not by invoice? They can issue you an invoice even when they know you are not looking to import. And then you move the money abroad and they move it back. I'm just saying, a simple example. So it's making it so easy, you know, for those who are fraudulent or those who have such tendencies to circumvent the system. So as long as somebody is able to get dollar, let's say, for instance, at 415 Naira in the official market, and is able to sell at 560 Naira or more in the parallel market, then there's already another business opportunity. And who would not take advantage of that? So there are several things to this. So allowing the Naira to float would help a lot of things. First, it means that everybody can now get the dollar at probably around the same rate, which means that inflation might actually not be impacted negatively, because many of these companies actually get what they offer in the parallel market anyway. So it might actually force the prices down a bit more. And then if it becomes more available and people are able to access it, because now what foreign investors are saying is that the current official rate does not reflect market realities. And in truth, the CBN has also adjusted that. There are news that they currently sell to foreign investors at around 460 naira to the dollar, no longer at that official rate of 415 naira. So what they are saying in essence is that we know that what they are saying is valid, that the current market rate does not reflect the actual rate. And that's why the CBN will move to sell to foreign investors at that, to attract that foreign investment. So what that tells me is that if they allow the naira to float, then maybe there will be more foreign direct investments. There will be more investment in the stock market and all the other sectors of the economy, which means that we can achieve more doing that than waiting and holding the naira down. We are not getting foreign investors, and then we're chasing people like Abuki FS who publish only rates and say that they are the ones causing Nigeria's trouble. Abuki FS has been out of the scene for some time now. So what has the impact been? Has there been any change? We can't see it. I don't know. Maybe Tolu has seen it. Maybe Debo has seen it. I can't see it yet. So those are the issues. And I think allowing it to float just solves many of them.